Good morning, investors, and greetings. Hope you're having a wonderful day. My name is Mike the CPA, and welcome back to episode 4, my favorite investments of all time. If you have not seen the previous episodes, I will be sure to link those below in the description and comment section, so be sure to check those out. Boy, oh boy, what a time it is, ladies and gentlemen, to be investing. I'm filming this on September 2nd. And the Dow Jones broke through $29,000 today. S&P 500 is sitting over $3,500. The NASDAQ is over $12,400. It's crazy, guys. Remember the start of this year when the stock market tanked, when COVID was announced, when people were getting the heebie-jeebies? Well, it's back. I hope you kept investing. I hope you dollar cost average in. You were able to pick up some good deals on some of your favorite investments, because if you did, likely it has really paid off for you at this point. My portfolio at the start of the year, my gain that I had coming into 2020 dropped down to like $3,000 at that point in time. But now, guys, I'm looking at this as of September 2nd. My net gain between my brokerage account and our 2 Roth IRAs, not counting 401k at all, but those 3 accounts, were sitting at a net gain of just under $32,000, and that's not even including the dividends. Everything else about 2020 can go you know where, but hey, I'll take a win when I can get it. All right, ladies and gentlemen, I have one of my favorite REITs I want to share with you today, as well as one of my favorite medical stocks. Before we get into it, I just want to take a moment to welcome all the new subscribers. Thank you for being here today, and just for everybody who's coming back to check out my videos. I can't believe we're over 57,000 strong, and we are on the road to 60,000 subscribers, hopefully before the end of the year. So your support means a lot. Now, the number one thing you can do if you want to support my work is subscribe to the channel. If you subscribe to the channel, there's that little bell icon. Make sure you hit that. Otherwise, YouTube will hide my videos from you. That's a game they like to play. It's really frustrating. But of course, the other things you guys can do is hit the like button, comment below, and share these videos. Thank you so much. Let's get into it. Wouldn't it be cool if there was a way that you could invest in
what does colocation mean? You lost
technology at the same time? Well, guess what? There is. And this is one of my favorite REITs, maybe my favorite REIT. And it's the Digital Realty Trust, ticker symbol DLR. I've talked briefly about this REIT before in some of my other videos, but let's go into a little more depth. This company is heavily involved in supporting data centers, colocation and interconnection strategies for customers across America and all over the world. So they basically have this whole array of information technology services. So it impacts a lot of different sectors of the economy. So like we're talking like the financial service sector, communications, we're talking about manufacturing, even healthcare, and they develop consumer products as well. So they're pretty well diversified with the types of services they offer, being a real estate company as well as a company that utilizes and deals with technology on a day-to-day basis. Think of colocation as like a hotel for private computer servers and like networking equipment. It's like where all the servers go to get together, have a good time, and they can share that space, they can party, they can hang out. But in a nutshell, it's a place where companies can rent out space to store their servers, their networking equipment, so they can operate their business from anywhere in the world. As far as revenue concentration goes, about 2/3 of their revenue is coming from the US. Another 30% is from different European countries. But they've even built a data center storage house within, I believe, South Korea. So they are expanding to other countries around the world. I think it's interesting to see that about 30% of their revenue actually comes from cloud-related services. The other comes from content and IT and networking. So that's the bulk of where their revenue comes from. The other pieces are divided into much smaller segments. The current share price of Digital Realty Trust is sitting around $153 to $155 per share at the time of filming this video. They offer up a 2.89% dividend yield, close to 3%, or $4.48 per share. Personally, I think this company is well positioned to take advantage of the future trends of technology, how businesses are operating, especially as more people work remotely, as we've seen, especially with COVID and everything that's hit us. People are working more from home. The use of IT, networking, being able to access your data remotely from your home office has never been more important. So I think they are well aligned with future technological trends. Now that would be a reason to look into DLR for your portfolio. But there's definitely reasons to take caution with an investment like this right now, especially any real estate investment, to be honest. With all of the issues in our economy, with the political unrest, the social unrest, with businesses across our nation being forced to close or shut down or temporarily suspend business, it is starting to have some sort of an impact on DLR and its revenues. I think in the short run, the revenues are going to take a haircut. Are they going to have to cut the dividend? I don't know just yet. I don't think they are. It is a possibility, though, at some point. I would encourage you to look at this investment, but certainly look at taking a position right now with caution. And I would say that pretty much with any real estate or REIT investment at this point in time. Speaking of dividends, though, this company does have a really good history of increasing its dividends year after year after year, which means that you as a shareholder, all you do is buy the shares, and usually the longer you hold those shares, the same set of shares, once you've invested in them, continue to pay you more and more and more income every single year that you hold them in general. Now, I believe the company formed around 2005, give or take, and that has been the general trend of the dividend growth of their company. Not saying the trend's gonna last forever, but that has been the trend. If we take a look at the financials, they do appear to be a money-making machine, especially if you look back at the comparative annual basis. You can see a long history of continually increasing their top line revenue, and their net bottom line revenue isn't bad as well. They have a lot of free cash flow, which is good. But if you're going to look at the financials right now, I really would encourage you to look at 2020. Look at the quarterly basis, because 2020 is going to be a really odd duck for a lot of companies, and this one is no exception. I think the revenues for 2020 are going to be a lot lower than they have been historically because of all the factors that are hitting the company. As of September 2nd of 2020, the performance year to date of this investment is about 30% compared to about 9.5% of the S&P 500. 1 year performance is 25% over an entire 1 year time span. 2 year performance is about 24%. 5 year performance is 150%, which is nearly double the performance of the S&P 500 over the last 5 years. So what I like about this investment and why it's one of my favorite is not only does it provide me a decent, steady, growing passive income, it provides me capital appreciation as well, which is not always an easy thing to find within a REIT type of investment. So the company, guys, I think they do have a bright future as they continue to expand in the need for these kind of services, of companies being able to rent out space for their servers as more and more work is done online over the cloud. This company is well positioned to take advantage of that. Check them out and see if this is right for you. Ticker symbol DLR. The next investment we got to talk about, guys, is Johnson & Johnson. This is arguably one of my favorite medical investments in my portfolio. I own a few others, but Johnson & Johnson is probably the one I have the most money invested in. I bet you have Johnson & Johnson products sitting in your cupboards and your medicine cabinet like right now. Fire to bet. And you might not even realize it. All right, I'm going to throw some brands at you right now. Let me know if any of these are in your household. How about Aveeno? Listerine, the mouthwash, when you want to fight gingivitis, keep your breath clean. How about Tylenol when you have a headache? Neosporin when you got a nasty cut on your leg from falling off your skateboard or your bike. How about Band-Aid? How about Stay Free, Carefree, Pepcid, Zyrtec, Motrin, and the mother of all allergy medicines, over-the-counter, Benadryl. At this date and time, Johnson & Johnson, each share of stock is currently priced around $153 a share and offers a 2.67% dividend yield, or just above $4 per share. This company has a long track record of continually increasing their dividends year after year after year, as you guys can see on screen. And more recently, because they're getting more and more involved in pharmaceuticals, the company is still growing, even though they are a healthcare giant, arguably one of the largest in the entire world, especially after being around for over 100 years. I think in 2018, they cleared over $80 billion in revenue. So just crazy numbers. They continue to beat earnings estimates even now. in 2020. If you take a look at their financials, you'll notice their top line revenue continues to grow. Their net income is staying steady, so their net income is pretty healthy still in my opinion. They have a lot of free cash flow. Cash flow statement is a statement I constantly look at as an investor because I want to know how much free cash flow the company has. Their dividend payout ratio is around 60 to 63%, which is not absorbently high in my opinion. It's not that bad. So I feel like their dividend is stable and can last well into the future, and their products, especially with COVID and this world we're living in now, are still in very high demand. I think this company personally is good for income. It's good for some capital appreciation. You're not going to get the growth of an Amazon stock by any means, or like a tech stock. Keep that in mind when you're investing in this, but you are going to get income, I think stable income for life, as well as steady appreciation. So in terms of appreciation, if I were to guess what you could maybe expect on average on good years, probably like 5 to 10%, and then add the dividend on top of that, roughly. That's kind of where it's at if you look at the graphs here, as you can see on screen. And usually in terms of performance, it does lag a little bit behind the S&P or stay in tune with it if you count the dividend. But that's the kind of returns I think you can normally expect from a company like this over the long run. So slow and steady growth would be my overall synopsis. I think as an investor, if you're looking to check out this stock, some reasons to purchase this, or at least look into it, would be knowing that there's a strong brand name recognition of their products that routinely generate large amounts of income for the company. The management is conservative, which means they're very tactful and they strategically operate the entity and grow the entity in such a way that it secures its overall base while trying to grow its overall profits. Thirdly, they are getting more and more involved into other products as they branch out into pharmaceuticals to help expand their bottom line. I think a couple reasons for caution though, on the other side of that coin, is you got to look at the fact that they might acquire some bad brands when they're getting involved with these pharmaceuticals. Who knows? Not all pharmaceuticals pay off. Some are big home runs and others are just duds. Another area of caution you want to look at, I think in my opinion, is look at the lawsuits Johnson & Johnson is currently involved in. I think you guys can imagine with a company as large as them, I think you can imagine that a company as large as Johnson & Johnson, a multi-glamorate corporation, one of the largest corporations in the world that operates within the healthcare industry, people's health is a very, very delicate market to be in. Because if you mess up, people can die. And so unfortunately, there have been some very tragic cases where they have proven, or I guess they've proven or through research, that some of Johnson & Johnson's products have caused people to contract cancer or has harmed the user. And so they're wrapped up in a lot of different lawsuits right now that have been dragging on. And of course, it's tragic. I hate hearing stories like that. If you take a moment and read up on some of the lawsuits, you're going to see what kind of products I'm talking about. I think one of the products is actually like a baby product. I think it's like baby powder, if I'm not mistaken. But these are products that Johnson & Johnson is reformulating to hopefully find a way to offer those products to its consumers without harming their end user. From an investing standpoint, lawsuits are definitely no bueno. It can be extremely costly for a company to be wrapped up in these lawsuits and cause earnings to lag or slug, or very sluggish earnings for a while until they can resolve these different suits. All in all, like I said, guys, Johnson & Johnson is not your young, sexy Tesla stock or your Amazon stock, but hey, even though they're older, they're still attractive. They're like an attractive cougar, if you will, and one that might be able to add benefit to your portfolio. So check it out. Johnson & Johnson, ticker symbol is JNJ. All right, YouTube fam, I think I'm going to wrap up the video here. I'm going to continue to drop and release these episodes around this investment series as quickly as I can. I hope to have a few more episodes coming out in September and definitely have all of this entire investment series wrapped up before the end of the year. So stay tuned for that. If you liked the video, be sure to drop me a like, leave me a comment down below. That is my favorite part about doing YouTube, is actually interacting in the comments with you and seeing what you write and having your opinions around these investments. What do you think of DLR? What REITs do you think are good? What healthcare stocks or companies do you think are good? I would love to hear your opinions below, and so that's where I'll see you. Subscribe for future episodes. Have a wonderful week, and I'll see you all in the next video. Live life uncaged. Peace.